very privileged to be welcoming a panel of all-star VCs in the region. Newer VCs, people that have been investing for a while, and people from across the region. So Ivan from STV joins us to talk about what's happening in Saudi and across the region. We have Sunil from VentureSouq, who used to do deal by deal and are now more of a proper venture fund in a way that they're launching. I don't know if that's public or I just gave away a secret, but
no comment.
Said it on your behalf, and we can talk about the evolution of venture and deal by deals. And Khalid, who has Newa Capital, which is a new firm and a spin out in a way from a different firm. So the first time that we are seeing people leave venture firms and start their own. So really the evolution of the VC ecosystem has finally arrived in small form, albeit we are all very small managers by global standards. But that's what we're here to talk about. Where is venture? Where is venture going? What industries are most interesting? And with that, I will say that we would like to have this as interactive as possible. So if anybody has any questions, raise your hand, and we'll bring them into the discussion. So I've briefly introduced everyone in order to avoid people going on, and people can usually just Google them and see what their accomplishments are. But I will ask if you can tell us quickly how long you've been investing in the ecosystem and the most exciting deal or bust that you've done in the last 4 years. So the one you've missed or the one that's done incredibly well that you're so proud of and you'll take all the credit for. But let's start with how many years and something super exciting either way for or against. Ivan, I'll put you on the spot.
Yeah, sure. So in terms of the number of years, I think it's 0.67, if I'm not mistaken, if my math is correct. I've actually joined the VC ecosystem relatively recently. I've been in the region for quite some time, 12 years to be more precise. And I've joined STV from Google, where I've spent 7 years kind of in a different part of the ecosystem, if you will, kind of from a digital corporate world. Very excited to be here in the ecosystem at this stage. I think it's super exciting. I feel, and this is kind of one of the reasons why I've joined, we are now kind of hitting the inflection point with all the deals that are happening, with the amount of both investment as well as the regulatory focus and so on and so forth. So it's, the path is only kind of up and to the right. What I'm most excited about kind of from our portfolio, I think we're all kind of pitching our portfolio a little bit, right?
For
this
Do it on my behalf.
It's a company called Noon Academy. And these are the guys who are kind of trying to revolutionize the education sector. The EdTech basically take on everything that we have seen now. I think especially with COVID, right, and people kind of going online to get more education and so on and so forth. I think these guys are kind of front and center in that. And I think what I really like about them is that they actually have a global focus, right? So they are actually our expert from the region, but their real target is kind of all the emerging markets and beyond with respect to what they try to do in education. So these are the guys that I'm very excited and proud of, and these are the guys that I'm keeping my eye on.
Perfect, thank you. Sunil?
So I've been investing in venture for about 5.5 years with VentureSouq. I did some venture with my previous employer, which was a sovereign wealth fund in Abu Dhabi. It's been an interesting journey. We started off as focusing primarily on global investments when we first started, but now we're looking a lot more inward into the region with a particular focus on FinTech and enterprise SaaS. The company I'm most excited about is probably a company called Katabook, which is based in Bangalore. It's essentially offering kind of accounting software and kind of platform to allow small merchants to keep track of their credit relationships with their customers. It's done phenomenally well. We invested in the seed round a number of years ago, and B Capital just led their Series B about 5 months ago. So,
congrats. Khalid.
I've been investing in the venture space in the region and emerging markets probably the past 13 years. My anti-portfolio is super impressive. So the things I missed on is great. So I think going back to like Maktoub and Souq, missed on both of those. So I'll start with the ones I missed on because I think that's what matters the most really. So probably Property Finder, which was quite contentious. It was a difficult internal conversation, but I think we missed on that. Schedule, which has become like a massive global player. And again, we were kind of quite close to doing it, but at the last second, I think we pulled out. over valuation concerns, which kind of teaches you never worry too much about valuation. And then I would say, starting with kind of the biggest successes, which is also one of the first failures, is Kareem. We could have been earlier investors in Kareem, but we missed on the very first seed check. Ended up doing the one right after, which, one of the companies most proud of. The other ones we're really proud of are, it's little known. It's a company called, because it's a B2B business in Turkey, called Insider. We came in at the seed check and is now basically one of the largest SaaS businesses in its category in the world. Sequoia ended up following us in that. Another company that we're really, really proud of is one of the first in the world is a company called Twiga, which does B2B agri-tech marketplace in Kenya, connecting farmers with small retailers. That ended up being one of the first business models of its kind in the world. Goldman Sachs followed us in that, IFC, etc. So that was a huge success for us. And now, most recently, I've just spun out myself and some of the team from where I was previously to set up Nua Capital, and we're just about to announce a first close, so we're quite excited to get going.
Great, fantastic. So the region, has some numbers and some data. We all wish we had a lot more data, but some of the numbers that come out on Magnet, which we all tend to say, okay, well, this is as accurate as we're going to get. Last year, the whole year had about $803 million of funding across the ecosystem. This year, January to Q3 had $802 million of funding across the ecosystem. So there is an increasing amount of funding in the ecosystem that we're seeing. We as Global Ventures are raising our second fund right now, and we're deploying out of that. And we still believe that there's room for the party to grow. But what are your stances? Enough money in the ecosystem, it's overcrowded on the capital side, or not enough money? And if, with that opinion, is there too much in seed? Could we do more later? What's missing in venture funding in MENA from where you're sitting? Khalid, I'll start with you.
I think there can be a lot more capital in general in the asset class in MENA. I think that the challenge is there's a geographic challenge, and then there's a stage challenge. So I think at early stage, a lot of, whether they're corporate groups or family offices that are kind of pivoting into becoming VCs, there's a lot of capital floating around seed and Series A, but then that drops off very, very seriously after Series B, Series C. So once you want to raise a $20 million ticket, it starts getting a bit dicey. You can raise it, but it looks like a bit of a Frankenstein. I think the other key issue is not whether the aggregate capital available is there or not. A lot of the capital on the LP side that's coming online is very, for lack of a better word, mercantilist in outlook. So it's very, we'll give you some capital, but you have to invest it in our country. But the reality is this asset class doesn't work unless it's pan-regional, even bigger, even if it should include Pakistan, Turkey, and to some degree East Africa. Once you kind of capture that wider geographic scope and you see how businesses can aggregate those types of geographies, it starts getting very interesting in terms of scale. But if you're saying, I want to invest in this country only, I think that's the issue. So you have a lot of capital coming online, but it's quite, I would say, a little bit narrow in scope. And I think that might be a bit of an own goal for us.
Sunil, what are your thoughts on this?
Yeah, I think I tend to agree with that. I think there is definitely more capital in the region than there has been in previous years. I think a lot of it is still concentrated at the seed and Series A stage, where you've got good VCs in the region. You also have a lot of international players, starting to kind of follow on with some of the relationships they have in the region and take a look. A lot of the funds outside the region that we talk to, they tend to want to kind of dip their toe in on the back of a relationship, and they're not leading deals yet, which you probably won't expect for a while. But I agree with Khalid. I think really where it's still problematic is Series B beyond, and then definitely at the growth capital stage where you invest in kind of into a well sought after Series A, but you're having to kind of already start thinking about that 20 or 30 or $40 million round to sustain or accelerate growth 18 months later, which I still think there's not a lot of players. I know STV is doing kind of a lot at the later stage, but we need more. Overall, I think we could still use more play. I think you're still seeing probably the same 4 or 5 regional investors looking at kind of high demand seed and Series A deals. It'd be good to have another 4 or 5 potentially come in, just to kind of add some diversity to the mix and help with terms and things like that. So there's always room for growth, I think.
And Ivan, you are the downstream investor. So what are you seeing? Do you believe there's enough seed and A's out there to provide you with a good funnel for downstream Series B? And I think you're like the only one on the block that like is officially a downstream investor.
Yeah.
Is it lonely?
Or
are you enjoying having your?
I feel we do feel like a bit of an oddball, for sure. I think, from that perspective, I think it's lonely in terms of the number of investors, but I think the issue is not the availability of capital. Right? I think the amount of the deals, the number of the deals that we see that are actually kind of applicable, they're kind of passing our threshold and bar, if you will, for growth stage financing, definitely doesn't hit the limitations of the capital available. Yeah. Right? So it's less about the availability of capital, but the availability of the deals from our side. But I agree, it's pretty lonely out there. Right? I think, and we as an ecosystem could probably benefit from more competition, more diversity in this regard as well, in Saudi and then obviously broader region as well.
So, we're all investors in the ecosystem, and we all take a look at companies. We try to believe that we build relationships from when they're starting in their seed until, they get to A, ultimately they go to B. And we like to believe that we create a lot of value for these founders. They tell us that we do, which is a good thing. And as we build out this ecosystem, what do you see as kind of the next steps? And in which industries specifically are you excited? I mean, we're at the FinTech Festival, so to kind of give some numbers, the region, I think last year had $72 million invested in FinTech across the year, across all deals, which is like one Series B round in Silicon Valley. But here, that's what we had. This year, in H1, we had $56 million. So you can say it's growing. It's also fewer deals, so it means that the deal sizes are growing, which either means that valuations are soaring or that companies are actually growing. Any thoughts on our valuations going higher, specifically in FinTech? And is FinTech an exciting space? And is it finally time for FinTech in MENA? So I'd love your thoughts kind of on the FinTech ecosystem and what you're seeing and what's exciting, particular deals perhaps. We've done in our portfolio at this point 8 FinTech investments. We try to look at the value chain. Some are B2B, some are B2C. But we're excited about the space, and I'm curious, we've never had the conversation on, is it overdone? Is it time? Is it time yet? We've all been, I feel, sitting very, cautiously optimistic about FinTech for several years, right? Is it finally time for FinTech in MENA? Sunil, you're nodding very, very, so I'm going to pick on you.
No, I definitely think that it's now the time where you'll see that acceleration in FinTech. I think obviously COVID accelerated that quite a bit in the last 6 to 8 months, and so you've definitely seen more deals coming to market, more ideas, more opportunities, some companies that are building things that you've seen in other parts of the world, but tailored for the region. So we're definitely highly optimistic about FinTech. Prior to this year, we'd invested in about 30 FinTech companies globally. And so, we've had the benefit of being able to look at the data points across all of these investments, some of their competitors and other general ecosystems that we're familiar with, including Silicon Valley, where we've made a number of investments, India, where we've made a number of investments, Africa and Asia as well. And so, for us, when we look at what's happened in those other markets, some of them are along the same lines in terms of size and demographic as the MENA region, particularly the broader MENA region. We're excited about where we think the growth is going to come, and so we've definitely got a very kind of specific focus and thesis around FinTech in the region, and we definitely think the time is right. We think valuations are starting to go up and get a little frothy, but that tends to happen when everyone kind of opens their eyes and sees what's going to happen, and we're particularly excited about FinTech because we think it's a foundational layer for overall growth in the broader ecosystem in things like health tech or broader e-commerce, or SaaS or other kind of digitization of traditional businesses and services.
So I'm going to push you further. You said you're excited and you have a thesis based on these 30 investments. You haven't shared what that thesis is, or what part of the fintech value chain are you excited about?
Yeah.
And what is your thesis, if you're happy to share it at a high level?
Yeah. So no problem. So we tend, in more developed markets, we have tended to invest in B2B or B2B2C companies. We think they're more easily acquired. They can move across borders a little bit easier. So we have tended to focus on that. However, in emerging markets, the early part of that foundational layer is B2C. You still, you're now starting to see companies that are building things that you saw at the very early stages of growth in the fintech ecosystem in the US, in India, in China, in Africa. And so, our thesis is, generally we will focus on B2B companies, because particularly in this region, which is highly fragmented, it's easier for a B2B company to, build something in Dubai or the UAE, move it into Saudi, go into other markets really, really quickly. It's harder from a regulatory and just a product market fit standpoint to do that with B2C generally. With that said, we will of course look at B2C opportunities, particularly because we think it's still, the second or third inning in the overall acceleration of fintech in the region.
So I concur. We're massively B2B investors. 70% of what we do is B2B. I also think B2B companies tend to be more capital efficient.
Yeah.
And in an ecosystem where capital is still scarce, that they tend to be more sustainable. Khaled, where do you sit on fintech, B2B versus B2C, or fintech's over, it's never going to happen?
No, I think also very, very bullish on fintech. I think the region, particularly MENA, if we kind of narrow our scope to MENA specifically, is probably one of the least, served by financial institutions in the world on multiple fronts. And so there are a number of kind of theses you can unpack within that. I think one exciting one, I wouldn't necessarily think of it as B2B, B2C necessarily, but one key thesis we have is around what we call embedded finance, where you have an underlying activity that benefits from finance. So for example, on the B2B side, you have, if you have like sort of a marketplace of some sort, where you're facilitating buyers and sellers, a lot of those buyers and sellers, either they're consumers or they're suppliers, have no access to credit, right, in between. So somebody ends up eating that on the balance sheet, and there's a massive opportunity to fill that gap by lending to either side of that. So you think of a company like in Saudi, such as STV's invested in, I believe, Foodex, right? Or you're not investing, you might invest in.
We were all giving away secrets here.
Yeah, so a company like Foodex does restaurant management solutions, also manages suppliers. What they're doing is they're financing the suppliers on a separate platform, which is super exciting. And you have a lot of those coming up, companies like Maksab or Sari, Maksab in Egypt, which does a FMCG marketplace between small retailers and FMCG wholesalers. They finance in between. So that's super interesting. I think the other really interesting thesis so we talk a lot about lending, either B2B or B2C, but there's another massively underserved market, which is access to global capital markets and access to sort of capital returns, not for the high net worths. I think you have all the global asset managers, private bankers here, but they target about 3% of the population. There's 97% of the population that has, average savings or median savings of around $10,000 to $20,000. Totally underserved, right? And they're not going to day trade on Robinhood or a Robinhood equivalent. They need access to structured products to get a 12% return on the S&P 500 or the equivalent. Today they make nothing, right? So that's a kind of really interesting thesis to play in that space as well. So I think there are kind of different elements within the fintech value chain that are interesting. The most significant headwinds are that, again, the region works as a region. The problem with fintech is it's regulated on a local level, so it's very hard to scale multi-territory. So I think that's the main challenge for fintech in the region, but hopefully we'll overcome that.
So this morning or yesterday at some point, there was a big article in the FT about fintech in MENA. And about the promise, and I think they covered some of the companies, Sadwa as robo-advisory and a couple of others. I'm not sure if you saw it. But I think as I'm reading this, it's incredibly exciting. It's great that the region is getting positive coverage in something, and we're showcasing some of what we're building. And then I always stop and think, okay, and then what? So as these companies go to raise their downstream, their Series B and so on, they have to look globally as well as regionally, or they have to look to Ivan. So Ivan, what are your thoughts on FinTech down the road, on scalability? Is it very local? Can companies become pan-regional within this sector?
Yeah, so we're actually quite excited about FinTech as well, which you probably couldn't see from our current portfolio. We have been sitting on the fence of FinTech ever since we started, and we just literally dipped our very first deal, I think, just yesterday with some of you guys on the panel as well. We invested in a company called Tabby, right, which is the BNPL company, buy now, pay later. I think overall, it's kind of a FinTech story. I think the other exciting thing that has happened over the last, I think, month or so has been the investment of Western Union into STC Pay, right? And I think that is actually a big validation of the opportunity of the sector. I mean, for those of you who are less familiar, STC Pay is kind of a spin-off, if you will, of STC, which is the Saudi telecom, which is a P2P plus wallet with more than 5 million users. And Western Union came in with a $200 million investment at a $1.3 billion valuation, right? So I think that overall is good news for the sector, attracting a strategic from an international, sophisticated market, getting them into the region, and kind of validating that opportunity. I think some of the headwinds that have been spoken before, I think, are real, right? And I think we are very closely looking at what the regulators are doing, right, in terms of kind of streamlining some of these kind of frictions, if you will, in between the countries in the region. Because if you only look at them on a country per country level, I think the opportunities of the number of sectors, number of white spaces are very, very few. And I think probably most of them are in Saudi as the largest market. Where it really becomes interesting is, when you kind of bring them all together and when you kind of start talking about more of a kind of a pan-regional or even beyond type of a play.
So let's pick up on that a bit, on BNPL, on credit, on FinTech enabling credit. So the region has one of the lowest consumer debt per household numbers in the world. And that's for many reasons. One of them is we're underbanked. The other is Sharia. The third is credit cards are really hard to come by and are reserved really for that 5%. So when you take a look at consumer debt per household in the, I think it's the IMS reports, this is really one of the lowest parts of the world. Does BNPL, so BNPL is buy now, pay later, it's the hottest thing in FinTech in the last couple of years, and the region's finally caught on. So does BNPL change that? Is this another form of consumer debt, retail debt, but ultimately the consumer is responsible for it, that is nicely packaged so it doesn't seem like credit and is available to the unbanked or underbanked in some form? I mean, most solutions in the region still require that you have a bank account, but we're moving to it's not going to require that. So where does BNPL play? And I'll let Sunil answer that. And then my second question on credit and debt is, we don't have venture debt here yet. Is there space for venture debt, especially since most venture debt does go to SaaS companies? Do we have enough SaaS companies to enable venture debt? Is that something that's coming imminently, or way down the line, we're not ready for it as an ecosystem? So 2 questions, feel free to pick one or talk about both. Sunil, maybe on BNPLs, you also did Tabby, we did Tabby. I think 3 out of 4 of us here did Tabby. There's no such thing as clubbing deals, apparently.
It better be the next thing.
Yeah, we're all in this together.
No, look, I think you bring up some good points, and we're bullish on buy now, pay later as an overall segment within FinTech for the same reasons you are. I think what's really exciting about buy now, pay later is what the second, third, and fourth iteration of it look like. We, as you mentioned, credit card penetration is especially low in the region, and a reason for that is, and the difference between a buy now, pay later is another form of consumer debt or consumer credit is really, the data points that'll be used to make those credit decisions. So, you'll see different types of people being able to avail themselves, different demographics being able to avail themselves of credit in a way that they were never able to in the past. And so the difference will be the way that they're scored from a credit standpoint will be completely different than a traditional bank, which are pretty much fairly conservative in the region. And so we're excited about it. We're excited about what can be built on top of that beyond checkout online or offline retail, being able to pay 30 days later. That's, I think, version 1 of what this whole thing looks like. And if you follow what's happening everywhere else, the CEO of Klarna, which is a big global buy now pay later, was on CNN a couple of days ago, and they've managed to, because of data, managed to get their default rates. He said, kind of 1% or sub 1%, which is much lower than credit card default rates in a lot of places.
Can I ask the audience first, has anybody ever used any of these buy now, pay later offerings? No? Yes? One. Okay. Does everybody know what they are? Yes? If yes, raise your hand. That way we can get everyone stretching for a bit. So some people are not very familiar with what BNPL is. Okay. Do you want to take 30 seconds and explain BNPL?
Yeah, sure. So very, very simply, it allows you, whether offline and online, if you're going to check out with something at a store or in your basket from an e-commerce site, you're able to essentially use a service like a Tabby and either kind of pay in installments down the road or pay later. And they have different pricing models depending on kind of what option you avail. That's very simple.
And so literally, as you're looking to check out of your cart, you just click a button.
Yeah.
And so they've made it super easy, as opposed to, do you want the store credit card? Do you want this? Do you want to fill out these 15 forms? And so the data points that these companies are using are very different to traditional credit scoring data points, because they include things like, so what would Tabby include in data points, for example?
Well, I guess they would look at kind of basket size, your purchase history, all the types of things you've bought before. They'd look at the items, are they kind of at a small enough level to start off with, I guess presumably. Demographics and all of that would come into it as well. But it's kind of very, very quick credit decisions with relatively low risk, at least on an individual customer basis, because the price points are low to start off with. But there's a number of different ways which you can presumably go with this, which is what these global players like Klarna and Affirm have done. And so we're excited about that in the region here, as again, at the very, very early steps of an overall FinTech, acceleration of FinTech in the region, but also to Noor's point, that credit gap has been underserved for so long. And in the UAE, it's a different market than the rest of, or many other places in the MENA region. But places like Saudi, where credit card penetration is really, really low, Egypt, this access to credit could be very, very interesting.
You have a question?
Just curious, right? So something like Tabby would be available only for consumers, like in specific countries like the UAE, or would it attract a bigger global audience like Canada, right? So is that like part of the scale? I mean, like if we have a checkout, it's not just for the UAE, right? We've got clients from all over the planet. Would that then just the use case be built in only for specific consumer subset, or how does that?
I think they all vary. There's competition in the region like everything. I think, they're starting with a number of large retailers, online and offline. They're in, Tabby specifically is in the UAE and Saudi, of course. I would imagine broader regional penetration would be in the cards, but it's still really, really early days to be completely honest. But we're bullish on the sector as a whole, and of course Tabby's team and kind of how they've executed so far.
So I do think this is part of like FinTech 2.0 for the region and globally. So recently, a lot of the global players, there's Charge After, there's Afterpay, there's Clara, there's a lot of them that have become massive overnight, and they're already taking a look at the region because of this discrepancy, because of the demographics of the rising consumer, right? So you all know it's half of us are under 30, and nobody really wants to stifle their lifestyle, even though oil prices have come down and there's no access to credit. So all of a sudden, you have a solution. Move to venture debt, unless you want to add something on the end.
Like Tabby, I think one of the great things about Tabby is it's the first sort of lending platform of any type that's achieved this type of scale. And I think the critical piece here that's been an inhibiting force for lending platforms in the region has been access to debt, so capital, so you don't burn your balance sheet like lending. I think a lot of the large financial institutions like banks, et cetera, are going to be watching very carefully to see what the NPL ratios are like, what the defaults are like, and hopefully, and I think they will be quite positive, and that might unlock a large amount of capital to flow on these platforms, which has been one of the drawbacks of being able to kind of get these platforms to scale of any type, right? Either B2C, B2B, etc. So I think this is super exciting. I should say also, like I think we're 4 out of 4 on the panel, because like we also invested in the last round.
Oh, did you? So
from
all of us are
before.
Tabby.
I think we're all, there's a bit of consensus around this one.
So you're actually better off then.
No, it's in my previous life, not from this one. It wasn't set up on this one, unfortunately.
But I do think that this access to debt for both
Access to debt
companies and
is key.
is just growing. You can't be using your equity to float.
And to the venture debt point, I think an interesting use for venture debt is exactly this, is to flow debt, not necessarily into the companies themselves, but into credit platforms with an equity kicker. And I think that's really, really interesting. And the Tabby deal has some contours of that. But I think the region really lacks this, like access to large pools of institutional credit that innovative companies can make use of. And I think that's where it's interesting. Maybe a little bit less on what you typically call classic venture debt, but that's coming anyway. I think in the next couple of years, there'll also be demand for that.
Yvonne, do you see that down the
Yeah,
pipe?
not even down. I think it's quite present actually. I don't know if it's public knowledge yet, but one of our portfolio companies just closed a large venture debt round from a Silicon Valley vendor. And that facility is absolutely needed, right? If you think about how you finance as a small company, right? There's kind of from the cheapest to the most expensive. You have the traditional bank financing, right? Which obviously is not available to most of the small companies here. Then you have venture debt, which is supposed to be cheaper than, more expensive than that, right? But still cheaper than equity. But then all the things that we have available here in the region is really kind of equity financing, right? Which is not does not lend itself to a lot of these kinds of models, where we're kind of extending credit to suppliers and to the vendors and what have you. So I think there is definitely a need for that, and we're lucky to attract some of that money from the Silicon Valley, but we definitely need more local solutions and more local options.
We have a question.
Yeah, you mentioned earlier the second and third iterations of the NPL. I was wondering, as investors, whether there's consensus amongst you what that actually is, and what will be the pivot points, and whether you'll divert at some point in terms of the second and third iterations, or do you all think that are you on the same page?
I think, when we think about the second, third iterations of FinTech in general, BNPL being, I think, the second part of the FinTech evolution in the region, I think in the third part, we'll see a bit more sophisticated products. But I think we're still working our way through the first part of FinTech, which is much more, digital wallets, payments. We're an investor, for example, in a company called Paymob in Egypt, which is now, I think, one of the fastest growing FinTechs there, which is POSs, both on and offline, for SMEs, which is very important as you become a cashless transaction society where people don't actually have bank accounts and credit cards. So how do you bridge that gap? So I think that would be the first iteration. Let's get everything, digital. The second iteration becomes things like BNPL and other solutions we're starting to see, and even robo-advisory. And then I think the third iteration is when you start to take all of that data and start providing value-add services rather than just solutions. Is my opinion. I'm happy to debate.
I would just add, on that first layer of digitizing, point of sale, is layering credit on top of that. That'll be the next phase, the next immediate phase. It's already starting to kind of happen. I think the third one would be probably, I think one of the most underbanked geographies in the world, like we said. I think not just households are missing credit, firms, like SMEs, even medium-sized companies, they just have no access to credit in any meaningful way. So I think that'll probably be the third phase. How do you kind of get credit at scale to credit-worthy firms across the region? I think that's the really interesting next evolution. And it's probably going to come through that kind of embedded finance approach, like the point of sale or something like that.
Yeah, credit, just to add to that, credit is a key part of our thesis, not just in terms of companies that are providing credit as their first order of business, but really companies we're looking at in the marketplace space, solving for small and medium-sized businesses, buy now, pay later. It just, all of these businesses at some point are looking to add credit at some point in the value chain. And so it's a big part of kind of what we're looking at, and totally agree with what was said earlier in terms of, that third-party institutional credit and debt is really lacking in the region. Hopefully that gap will be filled soon. But in terms of kind of going back to the original question around, second, third, next iterations, if you look at it in a more binary or a more macro way, what we're seeing now is the unbundling of financial services, right? So you can go to any bank, look at their website, you'll see all the different product verticals, and literally every single one of those in other parts of the world have become unicorn businesses in their respective markets. So now what you're seeing is product expertise, better UX for the consumer, people starting companies that solve for one problem, but they do it really, really well. Ultimately, what will probably start to happen, which has happened to a certain extent already in a lot of other developed markets, is the rebundling of this. So you'll get unbundling, where you have, you go to your bank and you can get a separate product for, a checking account, something for compliance checks, something for credit, all these different various services that you used to get from one place, probably not in the best way from a UX standpoint or an efficiency standpoint. And then ultimately you'll probably see these all being rolled up again, and there being synergies, partnerships, acquisitions that will happen hopefully in the space, in 10 years.
So I'm going to pick up on something you alluded to earlier, called embedded finance, as you put it. We're seeing a lot of integration of FinTech and other sectors. So personally, in our experiences, we've seen FinTech and health tech come together a lot. I mean, we just invested in a company in Kenya called Ilara, which does remote diagnostics, where the biggest pain point is actually how do you fund these remote diagnostics hardwares for doctors, right? And so then there's the embedded FinTech in that to enable that company. So for us, FinTech is very interesting, and we're going to move away from it and say, besides the embedding of FinTech into something like health tech and digital health, what other areas have you seen become COVID accelerated? I'll start with you, Khalid, since you're looking right at me.
So accelerated sector, I think a sector that's like neglected, that is not as sexy anymore, is probably like direct-to-consumer e-commerce. I think one of the biggest dislocations, particularly in our part of the world, is retail. Retail is being completely reshaped right now. And I think COVID really accelerated that. And I think we built a thesis around there being an opportunity to build companies that are omni-channel, so they're online and offline, primarily online, but they do have a strong offline component. They lead with third-party brands, but then they also build their own private labels. And I think, and focus on very specific verticals. So we invested in a furniture business called HomeSmart, for example, in Egypt, that does just that. It has an offline-online component that's seen growth that I've never seen before in the region. Iowa is another company we invested in, which is online eyewear. And they start with third-party products, but then they've pivoted towards their own brands as well, and you see like very significant growth in that. So I think within that area, I think there's a lot of interesting opportunities as retail is being totally reshaped in our part of the world, where it's been very dependent on third-party agency type arrangements, and I think that's something to look out for in the region.
Yvonne, besides you had mentioned ed tech before, like Noon Academy, what other industries do you see being really accelerated, either in adoption or in R&D development?
Yeah. So the point of e-commerce, I think multiple areas of e-commerce, right? So and kind of from a whole integration point of view, right? Both e-commerce as well as delivery. I think two companies that we've invested in Saudi have seen tremendous growth, especially during the COVID times. And these are Nana, which is the online grocery marketplace, kind of an Instacart, if you will, of Saudi in the region. And then the other one is Marsul, which is kind of a deliver everything anywhere, right? One of the most popular apps in Saudi. And we looked at those numbers, and obviously some of those have kind of since come down with the end of curfews and all.